Hey, so it's been a little while since we checked on Enphase, going back to July 9th, it looks like. At that point, it was trading at 181. Now it's trading at 128. So the plan is we're going to go over their Q2 earnings and Q3 guidance. We'll look at just some news that's been happening over the past 2 months. And then we'll look at the technicals just to see is now a good time to buy. Uh, we thought 181 was a fair value, so 128 I would imagine's going to be a buy, but let's just go through what they did. So what the results were. So they actually came out revenues 711 million, pretty good for the full 6 months, roughly doubled that. Uh, Lots of growth compared to last year, going from less than $1 billion in the first 6 months to now close to 1.4, in between 1.4 1.5. Gross margins around 50%. I think we'll mention it. It's more like 42%. I believe there's another slide that actually says exactly what it is. Some other changes, we see R&D that rose significantly compared to last year, same period. Same with sales and marketing, at least for the full 6 months. That seems to have had a little pop. We would kind of expect that, especially with a company growing. Interest income, that also saw a pop. Not like a revenue driver here. That's not something we're really counting on. I wonder if those are part of these IRAs, which we're going to touch on that shortly. But then going down to net income, it doubled compared to the last year, 6 month or even the 3 months. Pretty good though. Gross margins look decent. The money that goes all the way down to net income, that also looks good. So at least so far, it looks pretty good. Balance sheets, we'll just go to the current assets versus current liabilities. We have $2.5 billion in current assets. Current liabilities at about 743 million. So they have like 5 times, or no, like 3 times as many current assets as current liabilities. We had accrued liabilities was the biggest kind of jump. Other things kind of moved in proportion. Cash, that saw a big decrease. I have to imagine that has to do with purchases of new facilities, potentially. It also looks like marketable securities went up, so actually maybe cash just went into buying these securities. We also see debt that stayed relatively flat. But yeah, they have tons of cash or marketable securities in this case that if they could just sell off whenever they want and pay off any current liability. So, again, no real concerns at this point. Here is where we kind of get an idea of the trouble that's kind of happening. Uh, right here in this top left, I gave some highlights here. The dark bar, that's this year, 2023. We can see when we look at last year, big growth. We can see that bar really shoot off, and that's a good image. It's just number one, we're seeing it's flat quarter over quarter. Even when we look at last year's, yeah, we do have some flatness in like a quarter over quarter, but for the most part, we can see like a stepping up. But now all of a sudden, and it's not just for 2 quarters, it's 3 quarters, because if we go back to Q4 of 22, it was right at about 724 million dollars in sales. Then it went to 726, and now all of a sudden 711. And we didn't even get to the guidance yet. And the guidance is probably the worst part. But this already, now we're starting to get an idea. Revenues are flattening out. Uh, I believe we touch on it, but more or less what they're saying is it's just a correction, mainly on the US side, which we'll show some graphics of that. But they do expect expansion in Europe. So again, we'll see how this plays out. Probably will take some time. Not going to be a quick fix like next quarter, but potentially by the end of the year. Um, Here's also gross margins. We pointed this out earlier. It was actually at 46, so very good. We like to shoot for 50%. This is very close. And that's kind of why they made the list. The high growth in revenue and then the gross margins. We're happening to catch this on a flat quarter over quarter revenue. So Uh, Kind of gives us second thoughts on that. Then we have operating expenses in the bottom left, operating income percentage in the bottom right. Again, seems decent. We're getting that 30+%. That's always nice. And the operating expenses kept relatively in check, 13% compared to even 2 years, it was 16%. So it seems like they have an understanding of their business and keeping margins in check. So again, just a hint though, it's not until we get the guidance that's really gonna throw everything off. But here's just a different view. So instead of looking at the bars, we actually have the dollar figures, revenue. Again, we can kind of see it flattening out, especially for the last 3 quarters. Gross margin, what we see here is a nice little pop. I like the sign of this, where for the full year of last year is less than 42%. These first 2 quarters of this year, it's at 45%. So they're improving there. Operating expenses, relatively flat, actually slightly down. Operating income, that actually improved slightly due to gross margins, of course. And then down here in the bottom, we're seeing the what the U.S. versus international is doing. It's right now it's about a 2-to-1 split. Actually, probably more than that. Maybe like I don't know, a 40-60 type split. It's pretty close. And international, we're kind of expecting that to pick up. U.S. might stay flat for another quarter, but international, we're thinking that's going to step up a little bit. And again, we'll touch on that once we get into the news. But yeah, that pretty much sums this one up. Then we have statement of cash flows. A lot of changes here that were notable. I'm just going to read through them. And again, nothing really was concerning here. I would say I'll just scan through and say the biggest pop. So we have net income. That was a big driver here. You started with a high number, able to bring that high number down through more levels. Another big pop here, we have accounts receivable, but that's most likely a timing thing. We have accounts payable. Again, just a timing thing, but that went up quite a bit. Deferred revenues, again, a timing thing, so no concern. Purchases of marketable securities, we saw that on the balance sheet. Big pop there. They bought a lot. They also received a lot of maturities there. So that kind of offset there. No concerns. Repurchase of common stock. They actually maxed out their repurchase, and so they set up a new repurchasing plan. Again, we'll touch on that later. But those were the big pops. So again, kind of good things here. They're repurchasing their stock. They have plenty of cash. They put them in the markets so they can gain more interest. A lot of good things when we look at the statements. It's just the revenue growth. That's what's hurt this company. And then looking at the guidance, this was like the second strike one, and then this is strike two, where they're saying revenue. They're projecting a range between 550 and 600. And so again, if we look at this chart, they're going back to about like Q2 of 22. That's when they put up that number, right in between last year, what they did last year. And of course, the concern is they're still probably going to have operating expenses in the 150s. So their operating income's probably going to shrink to maybe like this 14 to 15, like mid double digit teens, which is definitely a step back. We'll of course see how it all plays out, but that's kind of what I'm expecting when I see this. Gross margin, still thinking that it's going to be in the 41-44% range, so that's good. Again, operating expenses, they're saying that's going to still be about flat, but if the revenue's down, that means less net income. They said they're managing through a correction in the U.S. market. Hopefully that is the case. As they're saying, residential solar has only achieved 4 to 5% penetration in the U.S. Again, I think they're targeting more commercial buildings, but they do have that offshoot of residential, and so they're saying that is a route that they can take. Several positive long-term drivers, such as the 30% ITC tax credit, rising utility rates, increased grid instability, climate change, and increasing EV adoption. So a lot of routes here. This company does have a lot of potential still in front of it. It's just to see it step back in what we would have thought is the early stages. Kind of hard to wrap our heads around, but if we're looking ahead, again, a lot of potential here. And then we have a couple graphics here on the right that just shows kind of a quick summary of what we just discussed. Something else that I think is worth mentioning, that currently their capacity is 8.75 million micros in this quarter. They're hoping to leave the end of the year with 10 million. So revenue's going down, which we realize means sales are probably going down, and yet they're still adding capacity because they realize, looking ahead, sales are going to pick back up. This probably is, like they said, just a correction, and once things kind of level out, they'll pick back up. We just went over that. So some things that kind of came up from the earnings call. I mentioned how they repurchased about 1.25 million shares for about $200 million. We saw that on the cash flows. And so they authorized a new share repurchase program for 1 billion shares, set to expire July 26, 2026. So a lot of cushion there. They can buy back a ton whenever they want. No real pressure either, about 3 years away. There was a mention that their next phase will be to introduce these EV chargers into all countries in Europe, and that will happen in Q1 and Q2 of 2024. So they do have this game plan set. This would be, I don't know, about 6 months or less that we might see the results of this. So I'm looking forward to that, and hopefully they break out their income statement to show, oh, these are the EV charger sales versus the solar system sales. Hopefully they do something like that. And they probably will once the EV chargers comes to be like a sizable portion of revenue. And then the last thing, we mentioned that this IRA. So what does this stand for again? Some sort of tax credit. And so right now they made a net benefit of 1.6 million, and that came from just 50,000 units shipped at roughly $30. Q3, they're giving guidance of 600,000 units, which would be an estimated $14.5 million to $16.5 million as like a tax credit to them. And I'm guessing that's rolled into that other income that we talked about. This is due to like it's Inflation Reduction Act. That's the IRA. And so with that act, just because they're producing things in the U.S., they have a couple facilities, we'll mention that in the news, that when they put out a unit, they're getting $20 to $30 per unit back from this IRA plan. It's kind of incredible. And so for Q4 of 24, they're projecting 4.5 million units per quarter. So that's $112 million in this tax credit. So that's like a revenue stream on its own, considering that right now they're projecting like 500 to 600 million, and then they're saying in this IRA credit they're going to get like a sixth of that just from a tax credit, whether they sell it or not. So very interesting. We'll see how it all plays out, of course. Moving on to the news, so one of their facilities, I believe this was their first, and I think the U.S. government paid for most of it, if not all of it. But Joe Biden, he traveled to South Carolina to tout a new $60 million solar investment, which was Enphase. This was the first U.S.-based contract manufacturing facility for Enphase. They had factories in China, Mexico, and India, and so now they're in the U.S. And it seems like it's mainly due to this IRA tax credit deal. They also launched IQ batteries in Spain and Portugal, so this goes into their plan to expand in Europe. They also released its SolarGraph software platform in Brazil, another country that they're recently explored. And I guess now they have the software which will allow, it is used by solar installers for creating production system proposals to plan documents for both residential and commercial customers, sounds just more like an efficiency thing. Their contractors will now have this platform that can help set up just how their batteries are meant to be installed for any type of solar system that needs to be installed. We also have Enphase and Bayware expand distribution partnership in Poland. So again, another country in Europe that they're hoping to expand into. They also have Legacy Power. Them and Legacy Power announce a partnership to expand solar, battery, and EV charger product deployments. Um, that one's interesting. We'll look into that. Uh, I believe Legacy Power is, again, part of solar, battery, and EV charging in the US. And now they'll just start to promote Enphase's products. I don't believe they had Enphase's products, but now they're working together. So Enphase can sell Legacy Power more of its systems. We also see Foxconn. They have a new facility. It looks like in Washington or Wisconsin. It looks like in Mount Pleasant, Wisconsin. Enphase, that's their second facility, is in that area, Mount Pleasant, Wisconsin. Looks like Foxconn's going to help them produce these um, just solar energy components. Didn't go into the details. And then the third facility, we have Enphase Energy begins microinverter shipments from Texas. They announced initial shipments produced in Arlington, Texas, making the use of a third contract manufacturer. This is part of that Inflation Reduction Act, has enabled Enphase Energy to manufacture in the U.S. So again, every time they make a shipment, they're going to get like $20 to $30 back from this IRA thing, and plus, I don't I don't know how much of these facilities they had to pay for. So I think they're in good spot long term. Uh, so yeah, we'll just keep watching it. So here's what the analysts are saying. I wish I would have grabbed this from last time we looked back in July, but I couldn't find it. But I did notice even just a couple days ago, between uh, August 28th and now, it already changed a little bit for the worse for them. Mainly the revenue. So right now they were projecting about 584 million, which again, that's between that 550 and 600. But now all of a sudden they're pulling it back to 574. Um, Again, still within that range. I don't think it will really impact that much, but just something I thought worth noticing. They also pulled back the next quarter results, but as far as the full year, not much of a change. And even going into next year, didn't really change there either. Uh, so yeah, I think analysts are on the same page. We'll of course see. Hopefully that Europe kind of expansion plan works out better for this company. But yeah, we'll be looking at this too. I highlighted this sales growth. So yeah, it's in negative. It's kind of pulling back, and that stinks, of course. But overall, for the current year, should still be up about 14.3%. And then next year, they're still saying between 17 and 18%. That's kind of why we like it. The overall market is headed up. And so yes, this one's pulling back. Hopefully that means a good buy for us. And then once it picks back up, we can continue on that uptrend long term. Uh, but yeah, here's how we saw it last time. It was trading at 181. We had a buy point marked at 167, even 148, and we're sitting at, I think, at 128 right now. We had resistance at 191. We noticed it was consolidating for just a couple months between 159 and 185. And then I mentioned this earlier about the overall market growth, that this Allied Market Research, they said the global battery storage market is expected to witness a continual annual growth rate of 20% over the next 10 years. So Enphase is in that market. They should be able to capitalize on this. Even if they necessarily don't have the best strategy, they should still be able to capitalize on this. But of course, we'll be doing our due diligence, checking in on this one. So yeah, let's pivot into the technicals. So this chart has changed a little bit. I added in a couple lines here, mainly the purple. So we've updated this to show now that there is this downtrend. We didn't really pick this up earlier. We drew in our lines, and I think that just has to do with how frequently we were checking in on this one, which wasn't that often. And we just didn't really notice this until, well, until now, that this downtrend has been in effect going back to like September of last year. And so we added that into our note that this downtrend's in effect. Personally, the way I'm playing it is, if we look again, if we just expand out, look at it for the long term going back into 2020, it really kind of has consolidated sideways, or at least we can look at it that way, even though it's had these uptrends, downtrends. For that past like 3 years, we can kind of say it's traded sideways. And so that's what we were going off of. We noticed there was these dips that more often than not, it would support itself, such as at 148. We said 167 kind of acted as a spot. I wouldn't really say that's support, I guess back here, but anyway, so that's how we picked those spots. And we just completely didn't even recognize that downtrend again until now. And so it's good that we caught it. So at this point, a part of me is still going to play this one as it's a dip. We noticed that there was buy points here at 167. I thought it would catch itself. Even in the more recent times, going back to June, it kind of did act as support for about a month. Ultimately, once earnings came out and once they gave us bad guidance, that's when it really pulled back. That was the nail in the coffin for this one. And so, honestly, this downtrend could continue to just flow until we see that turnaround. Say, for example, they put out, say, 600 million this quarter, and then all of a sudden next quarter they're back at 700. That would show, okay, they're turning things around. But again, that could still, at the earliest, take a quarter. Earnings are projected to come out end of October. So guidance then would be like the first indicator. Otherwise, this downtrend, at this point, I have to imagine 116. It has not dipped below 116 since late 2020. If it does break that point, honestly, this one could pull back all the way to $60. I don't think it will. And I only say that because even though we've seen the revenues supposed to go down, we know the operating income, that net income, that's going to pull back, even in percentage wise. But overall, I mean, or I'm sorry, the operating income's actually, it's going to pull back in terms of percentage, but it should still be more because this company, I think I still have it up. Let's just flash back to, so that the last time it was at about 116, which is where it's heading, it was going for about 530 in terms of revenue, and it was making operating income of 94. Yeah, this will be tricky actually, because we know operating income's going to, or operating expense is going to be like an extra 20 to 30 million dollars. So this will be lower. Yeah, it'll be rough. This will be rough. We need to see a turnaround. I just have to imagine it's going to be, they'll be putting up very similar results. And if we go to 21, I mean, they're definitely beating 21. Let's see. Go back to 21 here. I mean, they're crushing that. Not so much in operating income. They wouldn't be crushing it. Revenue, yes. We'll just be waiting for the turnaround. So going back to, where is it? Yeah, so this one's tricky. We really haven't played many downtrends. This is kind of one of our first. But the way I'm going to play it, and that's really all I can do, is we had these buy points, and I'll zoom in. We had these buy points at 167, 148, and it dipped through that. I guess fortunately, or maybe unfortunately, we didn't catch those just because we didn't cycle back to Enphase quick enough. But I probably would have picked it up once, if not twice, and I would have just lived with it. And now, seeing it where it is now, knowing that I missed those buy points, I am going to add this one. At least 1 or 2 shares of this, just because it sliced through a couple buy points that I would have been comfortable picking it up. Even seeing it slice through, I'm still kind of comfortable picking it up. On top of that, we're kind of nearing what I think should be the absolute bottom for this at 116. And if it's not, like I said, I'm prepared for this one to pull back to like 61. Don't think it'll come that low, but we shall see. Otherwise, I think it's going to catch itself around 116. It might, in all honesty, it might have already caught itself, considering it was down, down, down for 4 or 5 weeks. Now all of a sudden it's slightly up. So maybe we've hit the bottom already. Either way, again, I'm going to pick this one up. It's at the bottom of the channel, which again would kind of be, if we were looking at it as an uptrend, that would be one reason to pick it up. Again, it's near 116, which we like that. And the fact that we missed these previous 2 buy points, that's all the more reason that I want to pick this one up. And I'll probably bulk up a little bit because, again, I probably would have bought once here, twice here, and then potentially here we are today. This would be 3. So maybe three shares of this. I think that's fair. But yeah, we'll look at other positions to see if this makes sense. But yeah, that pretty much wraps this up. So yeah, if you have any questions or want to add your insights, by all means, let me know in the comments. Otherwise, this is how I'm seeing it. Enphase currently at 128. At this point, the ideal buy for me would be 116, which was that kind of support point for the past 3-4 years. But I still like the price. It's at the bottom of the channel. It's near that one support point. And like I said, I kind of missed the buy on this at previous buy points, so I do want to increase my position on this. Resistance, currently we're looking at 165. That would have been the top of the channel, which seems miles away at this point. We added the date, earnings, again, not till a couple months away. And that downtrend since September 22, that is what's happening. But we still have that note, that 20% annual growth for the next 10 years. If that truly plays out, this should be a steal to pick this one up at a price like this. But again, we'll just keep watching it. And yeah, that wraps it up. So again, any questions, comments, let me know down below. Otherwise, please like, subscribe, and I'll see you on the next one.